Markets are down and everyone's panicking. I'm down about 6% from all time highs. And you know what? I don't care. It doesn't bug me one bit. This is normal. The market has pullbacks sometimes. If you react and panic every single time the market moves up or down a little bit, you will never reach your true potential within the stock market. My plan is not based on short term swings, it's built for the long term game. I stick to my blueprint that I have in Money Isn't Real. I keep paying down margin right now. This morning, I'll show you in a minute, I paid down $8,000 of margin. When the price drops to the point where my blueprint tells me that it's time to jump in, I will start to buy with more margin. But in the meantime, I do not overreact and I do not use all of my buying power immediately. And when the market drops to the point where I'm ready to jump in, I'm not going to just jump in with everything. I'm going to jump in with some significance, but I'm going to make sure that I'm ready for more volatility. The volatility is your friend. Volatility is how you can make some real money, but you don't want to be buying things that are too volatile, like certain cryptocurrencies, say XRP, Dogecoin, things like that. You're just hoping the price goes up. My anchors, which I'll show you in just a minute what I mean, are what keep me sane. This is where most people get it completely wrong. Panic selling and even panic buying. You will never get it completely perfect. But I can show you exactly how I'm sticking to my plan. So, real quick, let me show you what I mean about the market. So, we were up to 597 and now we're down to 558. So, over the course of the last week, I'm down like $28,000. For the month, I'm down 6,000. For 3 months, I'm up. Remember, if you were here the other day, you saw when in doubt, zoom out. Well, this is exactly what I mean. So this is just a drop in the bucket, and this type of thing happens all the time. It does not worry me one bit. The payment hasn't come through yet, but I am paying down $8,000 of margin today. I'm not panic buying. If I were in another stage of my journey, I would be buying with some significance, I would say, but I wouldn't be using leverage at this time. I would maybe, if I had a lot of cash sitting on the side, I would maybe use that to jump in with some significance, but I wouldn't be overusing my leverage. I wouldn't even use leverage at this time. So, my biggest anchor, and we'll talk about anchors in a second, is VGT. And we are down from 801 down to 753, which is about 6%. So, here is my blueprint. Money Isn't Real. It's about 30 pages long. Maybe after this, I'll go and add a little bit more to it. But anchors are what keep me sane. Anchors are the core of a strong stock portfolio. You should use ETFs as your anchors. You should not have an anchor be something like Bitcoin. It shouldn't be individual stocks. They are too volatile. You can get wrecked when you use margin and you don't have powerful ETFs as your anchor. So, what is an anchor? It mitigates some of the risk of volatility in some of your more speculative investments. Maybe things like Bitcoin, maybe you do have some individual stocks because you want to chase those gains, but this gives you some sense of safety when the market goes down. It's going to give you confidence knowing that you do have solid positions where you don't need to panic when the market goes down a little bit. And they're typically very growth heavy, right? So it will, well, mine are. So mine are very heavy in growth and very heavy in tech. So let's look at my anchor. So my anchor is VGT. That's my biggest one. I do have VOO, and then I have a little bit of XLK before I really dove into this. This is just something that I used to buy before I had really got started and before I found VGT. So VGT is my anchor, and then my second anchor I would say would be VOO, which keeps me sane when the market goes down like this. Let's take a look at what it might feel like to go through something like this, right? So I'm down about $30,000 since November 1st, so about 5 days ago. And really for the month, I'm only down $4,000, which is like a very, very small percentage of my portfolio. And then when I go to 3 months, when I go to 6 months, when I go to year to date, when I go to 1 year, just everything else is up. So it is a little drop in the bucket, but if you do own some more speculative investments, I don't even know what Bitcoin looks like. So it is just a little more volatile in general. For the month, you'd be down 20%, right? So if you're using margin with something like this, I'm not saying Bitcoin's bad, by the way. I think it's a very powerful investment, but something maybe like XRP is a lot more volatile, and that's something where you're probably just trying to get rich quick, which I never recommend. So I do have a bunch of rules in my ebook where I do discuss don't do this, don't do this, don't do this. Some of those things would be never day trade, never buy individual stocks, don't buy cryptocurrencies. I don't 100% believe in that. I do believe that you shouldn't buy anything except for Bitcoin if you're going to buy cryptocurrencies. I do think if you want to buy something like XRP, you might be rewarded for it, but I don't think you should try to get rich quick. I think that once you are rich, you then can use small percentage of your portfolio. What I mean by that is, let's imagine you have a $3 million portfolio. If you want to spend $50,000 on XRP, there's a chance it pays off, and it's such a small percentage of your net worth at that time that it might be worth accelerating your future growth to know that you might lose the 50,000. Whereas if you're starting out, you don't want to you want to focus on what works, right? So you want to focus all of your effort and all of your energy on having a powerful strategy like I outlined in Money Isn't Real here. So that's what I do even at this stage of a $600,000, $550,000 portfolio. I have I only buy things that I know go up in value over time. I don't take any huge risks. I don't buy things like XRP, even with any of my portfolio. And some stability is good, but you're also looking for growth. So, hope that is helpful for you. I want you to take away a few lessons here. So, when the market goes down, don't panic. Stick to the plan. Have a plan, right? You should use anchors, and anchors are very important, right? So let's see, the last 5 days, my anchor is down 6%. But that is why VOO also has a key position in my portfolio. It's only down half, it's down 3%. So that doesn't sound like much, but when you have a large portfolio, let's say 500K for example, that 3% itself adds up to be 15 grand. So that can help keep you sane. Before wrapping up, I want to go over a few quick things to make sure you stay safe. So, you need to keep your margin health. In a healthy market like right now, in my opinion, keep it above 70%, even 75%. And then you know that you can handle a big downturn without too much to worry. Here are a few more tips for you directly out of my ebook. This is how you can get wealthy, is between stocks, real estate, businesses, and cryptocurrency. So stocks are the easiest. Real estate does require more effort and more time. Business, in my opinion, is the hardest, but it does have the highest potential for returns. And cryptocurrency, in my opinion, you should only buy Bitcoin, but if you want to be a little edgy and buy other cryptocurrencies, by all means, it's your money, do what you wish. Now, when you use leverage, you need to have some rules. Here is what I would say you shouldn't do with leverage. You should not invest in high volatility assets like cryptocurrency. You shouldn't day trade, you shouldn't buy liabilities, and you shouldn't use it to finance a lavish lifestyle. Hope you found some value here. See you next time.